is a business. I know people go nuts when I say that, but it's a business. And the first child you're going to have is money. It's going to be the first child, and it's going to sit at the table with you every day. If you don't have money, you don't have a marriage. The reason people get married is to form financial stability so that they can afford a family.
Welcome to
No,
another
okay.
Nerdy Monday. What Kevin is saying is your first child in a marriage is actually money. It's not having a child per se, but it's money. You become a union, come together, and now finances change, different perspectives, credit cards, thoughts on debt, on what kind of debt is, good debt, bad debt. So, based off of what Kevin says, do you agree in terms of, you're married? What are your thoughts? Do you agree or not agree that it's your first child?
Um, it is a foundation for the future for sure. Like having, and it's kind of like having money is a stress reduction. It's a lot of things. But I guess if you're waiting for perfect financial conditions before you get married, or it can kind of derail your focus on your life's goals. So what do I mean by that? Money's not necessarily the first thing that you want to think about in your marriage, is what I'm trying to say. I think, yes, you want to have that financial planning and that future about how you're going to raise your kids and what you're going to do, but I don't know that you can put that as the forefront initially before you get, like, not before you get married, but when you get married, because these are things that you'd have talked about from day one. So I know I'm kind of contradicting myself, but the way he put it, I don't know if it's the way he said it that I have a problem with, or it's just the way he gave the example around if you don't have money, you don't have a marriage. Um, Money is very important. I get that, but to what extent in a marriage? Like there are more important things that you have to focus on, and then comes money because you need finance. So maybe it's just the way he phrased it that I'm not particularly comfortable with, but I don't necessarily disagree with what he said.
There's four pillars of a relationship and communication, trust, commitment, intimacy. But I argue that there's a fifth one, money, finances. I resonate with what he's saying. How I interpret what he's saying is just like a baby, that baby now consumes you. When you had your first son, I'm sure you guys had to change your schedules, change your habits, change your behaviors based off of this child. Money can do that, right? If you don't have, if you're struggling, if you're underwater, if you're not meeting your bills, it can get really annoying. It can get really, really stressful, right? Like all of a sudden you're getting these letters where, you know, please pay this or it's going to go to collections, or if this doesn't happen
Mhm.
this there'll be a disconnection and then you're going to have to pay for the reconnection fees. It can get really stressful, especially if the communication, which is one of the four pillars, is completely off base, where your significant other, whether you're married or even just in a committed relationship, you guys are now sharing your resources and they are becoming a burden because you guys are not communicating effectively. That money becomes this child, in a sense, this nagging child that you cannot get rid of. It doesn't go away. It's a constant nag, and it can sometimes make and break a relationship. Sometimes I argue finances should be one of those four pillars. I'm sure there's a book out there that has finance as one of the four pillars. So I think I completely get what he's saying. Not to say that you don't get it, but yeah.
Yeah. Yeah, I mean, still comes down to, and I guess sometimes you could look at it as a case of the chicken before the egg. Like, what comes first? You get your finances in order, or you get and then build your finances with your partner.
I was just gonna ask you that question.
Personally,
Yeah, I kind of think a
go
little
ahead.
bit different. Sorry, just letting you know
Okay.
your connection is shaky now. Yeah, I have
Okay.
a different spin on that. It might be from my experience, but growing up in the hood, it's always like, let me get my money up. Once I get my money up, I'm going to do this. Once I get my money up, I'm going to do that. And my whole thing is that is a fleeting desire. There's an old saying, more money, more problems. If you're trying to hit that goal of, say, make 80,000, by the time you hit that 80,000, you're going to want to get to 800. And then when you get to 100, you're going to want to get to 120. So my thing is, don't necessarily wait, put your life on hold until you make a lot of money. I think what you need to do is find somebody that recognizes your drive. You need to find somebody that can respect your drive, somebody that complements your drive. One thing I remember, I never wanted somebody that just stayed at home. Even though I could afford and pay for everything, I thought the woman that stays at home will never understand my drive, my passion, my work ethic. And so it'll just be arguing like, why are you always on the computer? Why are you doing this? Why are you doing that? I just figured a woman that recognizes that and does the same thing, like she has a drive, she has a purpose as well. She recognizes that. It's sort of like a fisherman. If you're fishing and you see another fisherman, you just wave because fisherman always recognizes another fisherman. You know what I mean? So that's just me. So I think at the end of the day, that's my logic. Maybe I'm off base, but
Yeah.
that's what I always believed. I agree with you in theory, but I think there's a reality where a lot of people don't necessarily get to that point. Time is the only thing that you never get back. You could always get back some money. You'll never get back time.
Mhm.
So that's my 2 cents. I don't know if you want to add to that or disagree or what.
No, I think overall we are I think we're in agreement about finances. It's where it's off, and I think that's where we have to get into this. That's a segue to what we're going to talk about today. Is finance is key. It's not about we're talking about when in terms of a marriage, but throughout your life, I think understanding finance and how to make your money work for you is very important. Everybody might have a different opinion about when you should start striving to get money, especially if you're a young person. I think the earlier the better. As soon as you understand, as soon as you're off your parents, or even before you get out of your parents' house, before the age of 18, I think it's important to understand that finance drives or money drives a lot of things and allows you to do a lot of things. Um, in a marriage, whether you're single, in a relationship, and in this day and age, I don't know what the dating game is like these days, but I would imagine that if you're financially stable, you have a leg in when it comes to you have your pick of the litter when it comes to the woman and the choice of what you can marry. You can choose the woman you want to marry. As opposed to if you're struggling, what Kevin said is true, but I don't know. I'm just speculating. I don't know how many women out there are willing to stick with you to and you know understand your drive because a lot of women, majority of women want ready-made products, not something that they have to stick with. I mean, there are definitely good ones out there that would see potential and work with you to make sure you get to that point. But a lot of times you're already at least at that point where they know that okay, this guy is somebody that's going to take care of me and stuff. So, but either way, money is important, and we're going to talk about that today.
Yeah, no, and you made an interesting point on money, and I guess the question is how to spot a gold digger versus a real woman. I met my wife before I had my own place and a modest car then. I remember I had to borrow money from her because I was paying so much in child support. But ultimately, the trick is I knew that she wasn't about money because she didn't get upset that I had to borrow money from her. I can really relate to people that have money now and then they're single. How do you decipher whether this person is really for you or against you? I would never want to be in that position. At least I know my wife was ride or die. She wasn't about that bag. Now I buy her Louis Vuitton bags. But ironically, in the beginning, she was not about that at all. So I feel for y'all that are single, that are making good money. I don't know how y'all do it. But I was going to ask you, Jai, what is the difference between earning and saving?
The difference between simply put, I mean, with saving, money is based on money that is working for you. That's the way I would simply put it. Um,
Mm-hmm.
so earning is something, okay, the other way to phrase it is that when you earn something, that's basically you got it from something, so you must have worked for it. So you earned it based on either you invest in something, either you're working for you work for a company. That's what you earned. The saving part of it is more, that's money you're keeping it somewhere. You don't spend it, right?
Mhm.
So maybe it's from your earning the portion that you set aside, right? But it's just sitting there. So they kind of go hand in hand in the sense that when you're earning some, say for okay, you can save to earn. So an example would be a GIC. So you're saving money in a GIC, but earn interest. So you're gonna get money back from that interest. You put money in a savings account to build an emergency fund, but that money's still yielding interest for you. So you're earning money on that. But that's if you do it the right way. So you can save money to earn money. And in some instances, you can save money without earning money. So you can put your money in the bank, that's saving, but it's not earning money. As
Mhm.
opposed to when you put your money in the bank, on investment, where it's earning money, and you can now use that money to do other things. I don't know
Yeah.
if that, yeah. So
Yeah.
it's they can be interchangeable, but the saving part of it is where it could be static if you're not earning money from your savings. So in other words, saving could be you can put your money in a tinfoil box in your basement, that's saving, or you can put it in a mutual fund where you use it to earn money. So
Yeah.
that
Yeah.
difference comes in.
Yeah, and I think you said the key word investing. So, you can earn by having a job and doing a 9 to 5 job and compromising your time for money. That's a way to earn. And then also you can earn through capital gains, you can earn through dividends, things like that. And obviously savings and things like that. But I look at savings as that's your principal. If you have $100, that's what you saved. The earning would be you making money and spreading that $100. You take that 100 and invest in something, and then that is giving you a bit of dividends, or you're leveraging the fact that you have this $100 and opening up a margin account, and now they give you 2 to 1, so now you have 200 on a line of credit that you can now use to invest in, right? And then you're earning from that. I think you said it exactly right. One of the challenges that I see, at least my friends, investing is always something that's kind of this black hole. Like people know it, but then people are afraid of it.
I mean,
I
but
don't know if you notice that with your
um,
friends or, yeah.
yeah, I mean, I have a very diverse circle of friends, but for the most part, I think at the basic level, majority of my friends understand the concept of investing. Now, I know we're going to go into this again. It's basically that the level of risk is different. Risk appetite is different depending on the friend that I choose to give as an example.
Hmm.
Some of my friends are okay with taking huge risks. A lot of them are not, but they understand that they need to invest their money, right?
Hmm.
They are the opinion. Some of them are that okay, well, if I buy property and I put it in mutual funds and I also put it in GICs and I also invest in stocks, like so they just put their money in different places at a high risk investments, right? Some of my friends are like, well, I'll just do my regular GIC and my mutual fund, and that's it.
Hmm.
Some of my friends would just buy things like gold and just keep it and just say that's my form of investing. So it's like a variety. But I think they all understand the basic concept of um, like money saving is different from investing your money.
Hmm.
So when you put your money in a bank account, it doesn't yield as much. You need to make that money earn money for you. So I think there's always a liar where it's like, you don't know what they're doing with their life or they're not doing anything. It's like, but I think that's where a lot of my friends are at this point.
Yeah. I find a lot of people are afraid in general of investing,
Mm,
but they jump on the bandwagon when it's popular. And I think that's probably not the worst thing. I mean, it's better than nothing, better late than never. But sometimes when you do that, you get a misrepresentation of how stocks and investing really is. You're kind of jumping on a wave, and if you're on a wave, you're at the highest point, that you're eventually going to come crashing down. Versus if you just bought that stock or whatever, that fractional share in just a simple time, then you can ride the wave up or down. And I feel sometimes when you just get on the bandwagon, you're on that high, and then what goes up must come down, and then it becomes this disappointing thing like, oh my goodness, and you lead into panic sale. So I don't know. I just find with a lot of my friends and family, it's kind of that you don't really get to diversify when you just jump on a bandwagon. Take the time to think, okay, what's the competing industry that complements this particular stock in this particular industry? Now, with that said, you could always do mutual funds and ETFs. What you have is broad base of stocks. That's what a mutual fund is, a bunch of stocks put together by a brokerage. You can just invest in this, and then the brokerage will then invest a portion of your money, your capital, into each one of these stocks that are in the ETF. And the idea is that ETF will balance. So it has enough where if oil's going up, then gold will go down, things like that, and it'll kind of balance out. So you could always do that. But again, it begs the question, do a lot of people do that? Do a lot of people know about ETFs and things like that? Um, yeah. I don't know if you had any more you
Which
want
is
to
what
add
I
to
was
that.
just going to say, like, no, I was just going to say, like, you talked about the ETF, and, some people might not know an ETF is just an acronym for like an exchange traded fund or something like that. Is it exchanged ETF? It's essentially just a bunch of investments, like you have assets like
Yeah,
stocks and
you're
bonds,
right.
and it
Exchange
allow it,
traded
it
fund.
just, yeah, exchange traded fund, yes. So it's just assets, bonds, securities all at once. That's what it is. And usually, if you talk to your financial advisor or a broker at the bank, they can explain it better to you, and
Mm.
it's an easier way to get into investing as well.
Yeah. I think we talked about this as well before, but time is so important. If you invested and started investing in your 20s, like that's amazing. It doesn't have to be a lot of money. Just do like maybe 30 bucks, $40 a month to something like a blue chip stock. What a blue chip stock is, like General Motors, basically solid companies that are probably never going away. Microsoft, Apple, those things are very unlikely to just dissolve, especially in this tech industry. And they're pretty much running our tech industry with AI being the new advent. These companies are at the forefront of it, taking the time to buy these stocks at an early age and just consistently buy it. Set it on auto deposit or auto pay to these stocks. And I guess this is a segue into something that we want to talk about: fractional stocks. I think one of the misnomers is a lot of people are like, I can't afford an Apple share. It's like 400 or 500 bucks. But a lot of stocks have shares, or you can do fractional shares. What we can do is I'm just going to log into my Wealthsimple and show you how to create some fractional shares. Jai, did you have any thoughts on what I just said while I'm setting this up?
That's fine.
Amazon, yeah, Amazon is 223.
Are
Yeah,
you okay? That was you right now. Like
yeah.
it's a way to start.
I'm pretty sure we could do fractional. I think I did it before, but we'll do it together. Just to
Okay.
recap in another podcast, I buy Bitcoin 30 bucks every day. And if I can quickly, I'm trying to remember where activity. And you can see every day market buy $30, market buy $30, right? Every single day, market buy 30 bucks, right? So again, just little things like that. Obviously, if you can't afford $30, do less. The whole point is that doing something is better than doing nothing. So let's see Apple. I'm going to see if Apple has fractional shares. So I want to buy,
There's a
and so we
tag
want to
that
do a
a lot
limit
like a
buy.
tag that a lot of them do,
Yes.
but yeah.
So don't see it here. Unless it's only in the app. Hopefully that's not the case. Because I know their
Yes,
mobile
that's
app
another
is
thing.
more advanced.
Yes, that's
Yeah.
true. That's
So
true.
let's
But
try.
for viewers online, It's basically there's going to be a tag that says fractional if you have a Wealthsimple account, or even if it's your regular bank account. Like there's a tag on a stock that you search for that would say fractional available,
Hmm.
and that's where you can buy it. And to our point here, and what we're trying to say is that it's not all stocks that have this option, but a lot of them do.
Yeah. Just trying to see this one. I think we described it before. It's like you're betting on black or red, like roulette. Your a call is you believe that this. Why are you laughing? Because of the
No,
gambling
because
thing.
I've never like yes, options is I don't know. I'm scared of that thing. I mean, it
Why?
works for some people, but no, I'm just being honest, like
Hmm.
I yeah, I have a phobia for options. Not to say that it's not a good thing.
Really?
Don't get me wrong. I'm just yeah.
um.
If you do your research, you have to spend a lot of time, not just somebody said this, so do so many options. No, you have to do your own research. And I think it also helps when you
Mhm.
do your own research. So when you win, it's a big win for you because you've done the work. And when you lose, you're not as maybe you don't feel as bad because you understand that, well, you did your best, as opposed to when somebody just tells you, oh, go do options and this is what you need to do. And then it's like, well, options is dangerous. I'll just put it that way.
Well, I mean, to the people that are already iffy about investing, I would retract that comment, Jai.
Okay.
I don't necessarily say it's dangerous.
Well, if we're gonna, sorry,
If I could
my
just let me
my
just,
my apologies.
and yeah,
Listen,
no, I was just gonna say it's definitely something that you don't want to just jump into. Correct me if I'm wrong. Keep me honest, Jai. What Jai is basically saying is it's like roulette. You know, you're betting on black or red. If it's going to go up or down, you're betting whether the stock is going to go up or down. But you have a contract with this company that whether it's a call or a put, you have to pay. If you do something wrong and make a mistake, it could be consequential. Say your TFSA. If you have a TFSA contribution room and you go over that, the CRA is going to tax you. It's like that. It's not as complex or scary. It's just like that, right? It is what it is. Just like with your taxes and your TFSA, the onus is on you to make sure that you understand when you open up these TFSA accounts and you're leveraging them that you're not going over your contribution limit. If you do, then the government will look at that as regular income and you're going to be taxed on that if you go over your contribution. Options are sort of the same thing. You just got to understand that if you don't do it properly, you could be on the hook for some stuff. I don't think anything major. Obviously, know your limits with respect to investing. Don't invest $10,000 on an option if you know you cannot afford. Right?
yeah,
If you make the mistake and you miss the call, the stock goes up instead of down. So that's about it. But I think at the end of the day, just like what Jai said, you got to do your own research. Investing is not scary. It's just meticulous. It's just something you have to understand. Now, one thing I'll also add, there's two different types of investing. There's actual traders, which they actually live in this market. It's called MetaTrader. I used to use this when I was doing Forex trading. What I was trying to say with options and things like that, a lot of times it's for people that are doing trades and they understand the different types of signals and different types of graph charts or certain type of patterns that you can see. MetaTrader is one of those apps that you can download and start playing around and understanding. It looks like it's specifically for forex and exchange markets, but nonetheless, you can download it and start playing around with it to understand it. Another thing, you could also sign up for Thinkorswim. Have you heard of that, Jay?
swim.
That's right.
Where okay.
Have you heard of it before?
Nope.
Okay, so Thinkorswim, it's
Think or swim
that's right.
from option. Yeah.
Yeah, Thinkorswim, it's pretty cool. I think it's by TD Ameritrade. It is a mock or fake trading platform. So basically, what TD will give you, they'll give you $100,000 of fake money, but it's actually real. It's not real time the stock market, but I think it's like either a day behind or a couple hours behind. So basically, what this allows you to actually learn to trade, practice, and see if what you're doing is working or making you money. It's called Thinkorswim. I think it's free. You just sign up for it, and they'll give you $100,000 of fake money, S&P or Nasdaq or whatever index you want to trade on, and it will allow you to do trades. You can do options to your heart's content, and it's pretty neat. I've only played with Thinkorswim, but I think other companies have them as well. Whatever bank you're with, I'm sure they have their own type of system where it's mock trading and you can practice and see if you're a good trader or not. You can see my screen, right? I was just looking for other trading platforms. So I think this is one as well. Trading is not the only, like this type of trading. We're just trying to open your eyes and make you aware of this type of trading as an option. If you are a layman and you want to just kind of set it and forget it and do the whole long-term thing, so you just want to put your money in and park it, you don't need to do any of this. You can just research proper ETFs, research your own stocks if you want to just buy a couple of stocks in your own and do your own little mix of stocks to try to hedge and earn from those investments via dividends. You could do that as well. Or you can do ETFs and things like that. But that's all. I was just going to add that.
Yeah, yeah. The other thing I was gonna add finally before I stop talking about options is I just Googled it, but let this right. So options is like you're driving a race car without training. That's what I Googled and I found that. So high speed, high danger. So let it sink in for a second. You're given a race car, you can drive, but you're given a race car and you're just told to drive it. So let that sink in what that means. High risk, high danger. Yeah, just, yeah, I'll leave it at that. No, Kevin's not too happy about it, but
No,
yeah,
no, I just want to make.
I don't normally go with telling people to go with options first.
No, I'm
interesting.
not saying to go with options first. A lot of people are already afraid of investing in general. And so that's all I was just trying to say. But I did my own little thing and I said, what's more risky, options or direct investing? And it says options are generally more risky than direct investing in stocks or ETFs. What options are riskier? Leverage, time sensitive, I don't know what they're talking about. Why direct investing is less risky. Ownership. When you buy stocks, you own a piece of the company, it underperforms, you can still hold it or sell it later. Long-term growth. These are why direct investing is good or less risky. You have long-term growth, historically diversified investments in stock market, especially through ETFs, grow over time despite short-term volatility. So that's very important. This is why we're really talking about investing. More often than not, you're going to make money when you invest. It's really when you do short sales or panic sales, that's when people say they lost money because you're panicking, you're watching your money go down. But like it just said, there's volatility. But overall, if you keep your money, you set it and you forget it, don't worry about it, more than likely your money's going to go up. Obviously, there's exceptions, but I'm pretty sure that's not the rule. The rule is your money's going to go down. And then last thing, lower chance of total loss. With direct investing, you're less likely to lose 100% of your investment overnight, which is quite possible with options. So bottom line, options, high risk, high reward, best for advanced traders. I think we both agreed on that. And direct investing, lower risk, steady growth. And that's about it. Options are just a part of trading. It's mainly for people that are experts or people that are focused on trading, like day traders and things like that. So since Jai always keeps score, he's right and I'm wrong. One thing a lot of people don't know about are drips. So drip is a dividend reinvestment program. If you do stocks, specifically long term, always turn on drip. I don't think it's turned on by default a lot of times. Basically, what drip is dividend reinvestment program, like I said, and what it does is it takes your dividends, whatever you earn, and reinvest it into your
Yeah.
investment. Assuming you're setting and forgetting it, what's cool is all of a sudden, one day, maybe 3 years later, you're gonna see like, yeah, $10 has been added to your account. $30 has been added to your account. That's your drip, that's your investment because you've invested with the company for all these years. Your shares grow slowly but surely. Next thing you know, you now have this stream of income. May not be a lot, but if you think about it, you have $10 from this company, $10 from this company, $10 from that little bit of money adds up. Next thing you know, you're earning $500 a month off your investments. The trick is you want to keep it in there because you don't want to get hit with capital gains. Capital gains happens only when you take the money out. So you'll never get hit with capital gains and taxes if you keep money in that investment. So I don't know if a lot of people don't may not know that capital gains only affects when you actually take money out or you sell that position or stock. You may get hit with capital gains. If you own multiple properties and houses, there's ways you can avoid the capital gains. Well, at the end of the day, accounting and investing kind of go hand in hand. If you structure something incorrectly, you're screwed.
Yeah, of course.
While I'm talking, if you can find if there's a specific stock that has fractional shares, and then we can try that one.
Okay.
So, when I was doing my estate planning, I was focused on creating a trust. I was thinking, okay, I'm gonna create a trust. I'm gonna put my companies in those trusts, and then that'll be perfect. I'm never going to hand money over to my kids. They're just gonna borrow from that trust for the rest of their life. All insurance policies are gonna be in that trust, and that trust is just gonna collect money like a bank. There's no need to actually take money out of it. We can just borrow from that. No longer dealing with the banks. I initially thought the trust would do that because trusts typically have protections where if you pass away, when your estate goes to your kids, it may trigger taxes. And then your kids have to deal with the capital gains, taxes. So what a trust does, it protects those taxes because you're not actually changing hands. You're just sort of giving them access to that trust, but that trust owns everything. Here's what happened. My financial guy was saying one of the challenges with a trust, though, a trust only lasts for about 20 years. So after 20 years, that trust needs to be,
Really?
the trust needs to be renewed or reset up, and that's when the government will hit you. The trust is not as safe as I thought it was. So I put all my money into my corporation, and all my kids' policies and investments go through the corporation. That's pretty much it. The thing about our tax system, you have the best advantages when you are incorporated. If you have an opportunity to incorporate yourself,
Yes.
I say you do it 9 times out of 10, twice on Sunday. There's just so many more options. Now, there's some pitfalls, but there's just so many more options when it comes to incorporating yourself and putting your money into a
Corporate, yeah.
corporation. I don't even pay myself anymore. I used to pay myself to pay for this and pay for that, but now everything's paid through corporations. Obviously, some of it's gonna have to convert to personal, but the fact is, my life is pretty simple. I don't have to deal with this bill and that bill. Did you find anything? Okay,
Stocks that have fractional.
let's give it a shot. Let's try this again. I was gonna say, and you don't have to use Wealth Simple.
And I said, while you,
Such a delay. Yeah.
yeah,
Okay, so I think we're just limited by the Wealth Simple app or the desktop app. I'm just gonna quickly go on my phone. I wonder if I can share my screen on my phone. But I'm just gonna
yeah.
quickly see if we're right, and it's limited to just the desktop app. It doesn't have the option. Okay, so stocks. You said that Nvidia did a fractional?
Yeah, Nvidia is one of them.
Okay, yeah, you're right.
Tesla, yeah,
So I buy stocks. What'd you say, Jack?
the tag.
Sincerely, our apologies. We didn't really test this before we did it. But basically, it'll be on the web at least, and I'll try to do this maybe as a B-roll. Instead of buying a quantity of shares, you can buy at a quantity of a price. So you can do $30, and then it'll show you the fraction of the share that you're buying. It's really that simple. And so you can set it as a one-time thing, or you can set it as reoccurring. And so the cool thing now is now you're investing in shares, right? You have some shares. So if I did, I'm just doing it on my phone right now. Just give me a second. So
Yep.
market buy, and I'm gonna do $25. So 25, oh no, sorry. I'm going to do 25 bucks. And so it says I'm going to have 0.157 shares of NVIDIA, right? Unfortunately, you have to buy at a full share price. If you do a market buy, you have to buy at the current market. So shares, and then you gotta choose two. And then, so as you can see, it's saying you have to spend $300 to get two shares because of the current market price for that share. But we're fractional, it's flipped, it's inverse. Instead of you buying at share level, you buy it at the price level. And then based off of the price that you can afford, it will calculate the percentage of that share you can buy at that dollar amount. Ultimately, what we're trying to say is investing is not that scary, with the exception of options, clearly. Don't get discouraged. I think it's something that's really great. Think of it as generational wealth. You are doing this for your kids and your kids' kids. The one thing we were looking for this clip, but one thing that I think is a great idea to do, and maybe this is another discussion we can talk about. If you have a niece or nephew, or you have children, your son, your daughter, buy them the toys, get them the toys as usual. But if they like, say, Roblox, if they like, get a Roblox gift card, but at the same time also buy them Roblox shares. You can gift them shares. Let's see if we can find it. Pretty sure Roblox. The trick is now what you're doing is, there you go. You are opening the eyes, so it's 103 bucks. If it has fractional purchases and buys, you can buy them 30 bucks or $100 worth of shares. I mean, if you're going to do 100 miles and just buy one share, but the point is you can do that. Who knows? This stock might go crazy in 10, 15 years. You don't know. But the point is that Roblox toy that you bought them, or that gift card, that's fleeting. That's done. That's gone. Once he spends that money, that's it. It never comes back. It was a one time instant gratification thing. But this can potentially last forever. This is the thing we need to do in our community. I don't think we talk enough about it. We talk a lot about gifting and material, but this is important. It's not tangible, but it's something that can grow you, something that can help you in the future. They always say those things, if you just invested $10 in Microsoft, you'd be a millionaire. Well, the reality is that it was hard back then. You had to be of that world and computers, and not everyone knew about it, but it's true. So think of it now. Think of Roblox as your Microsoft. Just invest in it now. A lot of people say, "Oh yeah, I wish I invested." Well, here's your chance. Do it now. So I think we covered a lot, and this is a lot of information. Hopefully, you guys found this interesting. This is Nerdy Mondays, where we talk about just nerdy stuff. So hopefully, y'all found it fruitful. Again, give us some questions, give us some feedback, whether things were clear or not clear. Let us know if we're making you money. Let us know. It helps us with the algorithms. Once again, it's been a pleasure. We enjoy providing you guys this content. It's been a blast. Hope you guys have a good one. Take care, and God bless.